Private equity is basically a form of ownership of a company where the shares are with a big shareholder actually that takes control over a company, and through active ownership and influence over the board and management of the company helps to actually make a company more successful, be it either through growing a company internationally, growing into new markets, but also make a company more profitable overall through kind of streamlining operations. And that's very different from public ownership, basically, where you have a very widespread kind of ownership in the company where you don't have a controlling shareholder who actively takes influence over the company. I think private equity works well if people or investors take a very professional stance or approach to private equity. It needs a bit of thought actually and know-how of the overall private equity universe to successfully play and invest in the space. I think where it hasn't really worked is for investors that are actually not really taking the time to think into the asset class and know all kind of the benefits, but also the pitfalls that you need to avoid when you invest in the asset class. I think the very large schemes actually that want to invest large sums or capital sums in the asset class, they take a very active approach to private equity. They cover the universe of potential managers in the space themselves. If they have the resources actually and have the size, then I think that works really well. For some of the smaller schemes in the space, it might make more sense to actually use advisors, use fund of funds actually to help them out, right? Because I think it's important to know that it's a very big universe of potential private equity managers, and it takes a lot of time actually to build up that know-how, to get all the relevant information that you need to take an informed decision. And if you don't really have the resources to do that yourself, then you should actually talk to people in the industry and to specialized advisors and fund of funds to help you out. And I think the two most important things to succeed in the asset class are to really kind of build the know-how that it takes, as I said before, to really map out the landscape, to understand the asset class. And the second most important thing is to take a long-term view, right? This is a very long-term asset class, and I think what some investors have done, or a mistake that has been done by some investors, is to really just invest in private equity in one cycle, and then if it hasn't really worked out, they pull back, right? And I think that's a mistake that you need to avoid. You need to be in there in the long term, and you need to go through various cycles, and really that's when actually private equity can be very beneficial to an overall portfolio. I mean, clearly there are fees in private equity on several layers, but actually they are related to the active ownership and skilled investors actually looking to make the best out of a company. There might be a perception that fees are not that transparent, but I think we have seen a very big change in recent years. Also, actually the regulator taking a more active approach to the asset class and asking managers to fully disclose all their fees. And I think we've come a very long way over the last years to make the fees very transparent in the meantime. And I think for any investors that really kind of approach the asset class and take the time, the fees are in the meantime very openly and transparently available. I think they should talk to industry bodies actually that do information sessions, invite actually the relevant players in the space. They obviously should read some magazines or specialized magazines that are published and are a very good starting point actually to get an overview. And then they should also start to meet different players. Before they make a decision, they should meet players from like direct funds, they should meet fund of funds, they should meet advisors, placement agents, so really kind of cover the whole kind of scope of potential players in the field, right? To get like to look at the asset class from different angles, and then that's actually the point where you can start to actually invest in the asset class. They should actually talk to specialized providers like ourselves, investors who have been successfully investing in the asset class on a global scale over a long period of time and actually have gone through various cycles to learn how to best play the asset class.